Hello, traders. I want to go over today's price action. Of course, this is just regular trading hours. This is a daily chart. My hypo for the week is that we would trade down here to the 50% retrace of the last week's weekly candle, or at least into this fair value gap on the daily chart. And we did trade down into it today, 25% of it, and we put up a really nice reversal signal and filled the gap for the second day in a row. Okay, so if we look at this on a 15-minute chart, you can see it poking down in there. We opened here. That's a sizable gap from where we closed. Let me show you that size of that. Yesterday we did the same thing. 188 point gap there. And yesterday we did the same thing. We opened with a gap down. How many points was that? We opened here. We closed there. There's 193 point gap. We opened with and closed it. And then today we opened and almost closed it. We went to a breaker that formed last night, also the middle of the end dog. So the breaker is really not that significant here, but the new day opening gap center is where it traded to when it took that big run up right there. And yeah, that's the new day opening gap. I don't know. Oh, I think it's playing off of that candle right there. Okay, so 15-minute chart. This is our price action for today. Somebody asked me about the first presentation fair value gap, whether or not I'm using that anymore. I do use it, but I usually don't have it on my charts for the video because it's been pulling away from it and not really returning, so it wasn't really a factor. Today it was. So we dip into this fair value gap high. This is the high end of it. Dip in 25%. Here's our breaker right here, our bullish breaker. And this is the trade of the day. Okay. So that's our bullish breaker right here. We push through it with a fair value gap. We respect it. The fair value gap and the top of the breaker are the same. So you can see how those wicks are wicking into this fair value gap here. Somebody asked me to explain those as well. The fair value gap runs from this candle wick all the way to that candle wick. And what it's referring to is all of this candle to the upside has no downside offered through it. A lot of times those things will overlap. And these are fair value gaps over here on the downside coming down. And so that's the fair value gap that formed through the breaker. We pushed through it with a fair value gap. We did not make a higher low, and that concerned me. We made a lower low, but we took out a major level, and so that's okay. But I would prefer to see a higher low. This was the only higher low we had was right there, which it was a good trade setup either way. And then we came back down to the breaker here. That could also be considered our higher low. And then we went up. And this is the first presentation fair value gap. It's pretty small, but that's the very first one right after the open. And we pushed through it and we came back to it, not to the tick, but we came back to it close enough for me. And then we ran for the hills. Now, if you were to get in here and you just took low-hanging fruit like the high of the day or even this section here, let's just see how many points that would be. If you got in a tick above that, and that's where I actually entered, take profit here. That right there is 81. Let's just say 82 points right there, 82. So on one micro, 82 points is $164. That's not a bad trade, not at all. But I wasn't confident the gap would fill. I actually, when we got up here, I was marking out these breakers, and when we got here and we validated this one, I was thinking we were going to go quite a bit lower. We never did take. I was thinking we were going to go to the bottom of that fair value gap. We never did take this low, but we did take this one on this rundown. So if I would have been going for low hanging fruit here, I would have been okay. But I was in it thinking we were going lower, and this happened. Woo! So all the money I made on this one, taking off early, I lost on this one, and ended up being a day where I did not make any money. I'm very upset about that because it's disheartening when you can call the market as far as where it's going to go at the beginning of the week, and it goes there, and you still somehow have no money in your account. It's a little frustrating, but I'll get there. It's not that I'm not making money. I'm making money, but then I'm trying to add to it and mess like this. And I mean, how can you predict something like that? That's a 142 point move that just ripped all the way up. It ripped through my stop, the very first candle, and then continued all the way up there to the middle of the new day opening gap. And I don't think that's very random either. Why would it go there and not go to settlement? Right there, in dog center, fall out of bed. And I still am thinking we could fill this whole thing in. I was a little nervous about taking this long, even though it was part of my system. I was thinking we could rip back down and fill that in at any second because we've been ripping like crazy. Part of the reason we've been ripping like crazy is because its Fed chair decision is tomorrow, and you don't want to be in the market when that happens. But this was the trade of the day. Because we have a new day opening gap, aim points for taking profit. This was a 25% fill already, just the very first rattle out of the box. So we opened here, we closed here. 50% fill to the gap would have been a great place to take profit here. You could even take, like, say you put 2 micros on, take one off there. And we already determined that was $164. And then let the other one run. You could leave it run all day, but you could take the other one off up here. I mean, just that distance right there on an extra micro would have added to your coffer to the tune of $100. So grand total on that would have been 260 bucks. That's not a bad day. It's not a several $1,000 day like we're going to have when we get our accounts built up, but taking those small profits adds up. If you had the fortitude to hold it through all this chop and say you put it at the bottom of the new day opening gap, if you wanted a complete gap fill, you would have missed it by a couple of ticks. But if you put it at the bottom of the new day opening gap, you would get on one micro 400. I'm going to round it up, $460 on one micro. 2 micros would have paid you $920. I'll let you do the math if you did 5 micros. 5 micros would have required about a $200 stop loss, which, looking at my account for the day, it would have been fine. 5 micros, if I put the stop loss below the fair value gap, I entered there below the fair value gap. That's a 32 point candle. So on one micro, that's a $64 stop loss. So if you did 5, that would be a $300 stop loss. That's a little much for me. I mean, I would rather get in with a little bit of risk, like even with 2 micros. That was over $100 risk, 120. So let's say you did 2 micros, and then maybe you added back in right here at the when we respected the first presentation fair value gap. You could add in a couple more if you wanted to, and just from there to there, taking profit on a couple of micros would have been, yeah, on 2 micros that would have been $200 if you added 2 more in right there, and then you could leave 2 on running to the middle of the gap and make some decent money. I don't know. That's this was the trade of the day, most definitely. If you saw that reversal this morning, congratulations. I hope you did really well with it. Um, it's a good one. You can put that on your chart because that is a really nice reversal pattern. Fair value gap, respected, leave town. Beautiful. Remember to be kind to yourself and be kind to one another. I love each and every one of you. If you have any questions, be sure to leave them in the comments. If you haven't subscribed yet, sure wouldn't mind having a few more subscribers. The more people subscribe, the more this channel gets referred to other people, and the more people I can help. So, hope y'all have a good day, and until next time, trade well.